Good afternoon. I'm Ellen McSherry, Chief Operating Officer at the NJCPA. Welcome to IssuesWatch. Today I'm joined by Ralph Thomas, the CEO and Executive Director of the NJCPA. Ralph is on my far left, and to my immediate left is the 2019-20 NJCPA President Kyle Sell, Partner Extraordinaire at Deloitte. If you have a colleague who wasn't able to attend today, we'll be rebroadcasting this presentation on September 25th and 27th. If you have any questions at any point, instructions for submitting them are on the screen now and will be displayed periodically during the presentation. We will try to address questions submitted during the live presentation throughout the program. Questions submitted during a replay will be answered within 24 hours. During today's program, we'll be covering many New Jersey issues, including the updated state board regs, a plethora of new employment laws, tax issues, and more. We'll also discuss a few national issues from the AICPA, the IRS, and more, and then provide updates on some key NJCPA programs, services, and initiatives. We're going to start with the new state board regs, a subject near and dear to your heart, and I'm going to ask Ralph to kick it off.
Thanks, Ellen. Yes, finally, the rules and regs that were under review have been adopted by the State Board of Accountancy. For a full listing of changes, visit the link on your screen. But I want to talk to you, share with you a few key highlights that I think you'll be interested in. The number of technical CPE credits were reduced from 72 to 60, and I think that'll be important for a lot of our smaller practitioners and whatnot. However, we need to note that there's still a requirement for 24 A&A credits, 4 law and ethics credits, and the 20 credit annual minimum remain in place. Interesting enough, now nano learning and blended learning are being allowed or permitted for CPE. Nano learning is CPE in 0.2 credit increments. That's 10 minutes. Another good change I think that will be helpful for our members are peer review exemption requests, no longer on an annual basis, but will be part of the triennial firm license renewal.
Thanks, Ralph. You know, I got to tell you, the peer review exemption is huge, and I know our members are going to appreciate that.
Especially since they have to go get it notarized
every year.
Or we're having to get it notarized every year.
A topic that we've been discussing really for about almost a year now is the pass-through legislation. And we've had some challenges with that, and Ralph is going to take us through that. Sure.
We have been advocating for this legislation for months. This would allow New Jersey flow-through entities to pay taxes at the entity level instead of the personal level, and that would be extremely helpful to small businesses and business owners impacted by the SALT deduction cap. It's estimated that this legislation, if implemented as originally presented, would save New Jersey business owners hundreds of millions of dollars and at no cost to the state. The bill passed both the full Senate and Assembly without any controversial vote. It then went to the governor's desk, and unfortunately, amendments were added that would direct some of the savings to the state. And basically, what we were intending to do was, for lack of a better description, eviscerate it, so to speak. We're currently working with the staff members on the administration to get some of the amendments removed, and it's our hope that they will be. And again, this would be such a big win for the business community here in New Jersey, and something that the governor could really tout that he's done to help stimulate economic growth in the state. So we'll keep our fingers crossed, but we're going to work hard to try to see that this goes back to what we originally submitted, and hopefully that will be the case.
That's great. Thanks, Ralph. As we mentioned in the opening, there's a lot going on in the world of unemployment law. I'm going to ask Kyle to take us through what we need to know.
Good. Thank you, Ellen. Good afternoon, everyone. So the wage theft bill, New Jersey businesses now face criminal penalties for failing to pay wages owed. It could be a third-degree crime with 3 to 5 years in prison and $15,000 in fines. The law would also affect those who make honest mistakes attributable to legal complexities of New Jersey's wage and hour law. Also, some new employment laws around asking about salary history. So starting January 1st, it will be illegal for New Jersey businesses to ask their job applicants for their salary history. Fines here also can be substantial, $1,000 for a first offense, $5,000 for a second, and up to $10,000 thereafter. Also impacting employers is the employee misclassification. The state now is cracking down on this issue. There was a 2018 Governor Murphy task force that found 12,300 cases of misclassification. That resulted in $400 million in underreported gross wages and $14 million in unpaid state unemployment and temporary disability contributions. Just some reminders about a few other employment-related laws signed in the past year. Arbitration is now banned in all employment contracts. We here at the NJCPA have opposed this legislation. Arbitration is fast, fairer, and a more efficient way for parties to resolve complex disputes. We also had the new paid family leave rules that are now in effect. Many components to the rules. There are many components to the rules, and there is a link on the screen that you can connect to and get more information there. Paid sick leave. Employees now must accrue 1 hour of earned sick time for every 30 hours worked. This also includes part-time employees. It applies to employers of all sizes. The pay equity bill was signed last year, and it's the most stringent in the nation. It places a very significant burden on New Jersey employers of every size, and the presumption of illegal discrimination where any employee in any protected class is paid less in wages and benefits than employees outside that class performing what they call substantially equivalent work. There's much more to these important laws than we can cover here. There's an upcoming webcast on October 17th, a webinar. Again, more details are available at the link on the screen. Ellen, back to you.
Thanks, Kyle. You know, so much is going on in that area right now, and it is important to get as much information as you can because, you know, employers can be caught holding the bag, so to speak, and not really realizing what they might be at risk for, especially those that are unintentional.
Sure.
And also on the pay equity situation, it's just not the pay equity as it relates to New Jersey. If you're in a particular job and a company has multiple locations, you compare that to what's being done in the other locations. So if, it makes it very complicated and difficult for employers here to adhere to that, because to your point, it used to be on the employee to prove it. Now it is on the employer to make sure that they are in compliance or to address or present their issues. And it's going to be tough sledding. This is going to be interesting, but pay equity is while it's a great thing to do, it really contributes to New Jersey continuing to be an outlier amongst its other the region and other states across the country. So
absolutely. So Ralph, I know we've been monitoring other legislation and the New Jersey business climate, so I'm going to ask you to take us through some of the things we're looking at.
Yeah, there's been a slew of legislation passed that is not business friendly, to be quite honest. In a poll that we recently did, 65% of those rated the business climate in New Jersey as either fair or poor. The top 3 issues most likely to hinder future economic growth, no surprise: high taxes, pension and health benefits funding for public employees, regulatory burdens. The top 2 greatest concerns with regard to operating a business in New Jersey over the next 12 months, the state's physical problems. 30% of those that responded to the survey indicated that. State and local taxes. Garden State Initiatives, an independent research and educational organization, released a study recently on the total cost of government in New Jersey. We always hear about as New Jersey really as efficient as it can be. So when you think about the state budget combined with municipalities, counties, utilities, that all totals to about $117 billion. Public employee benefits is the largest expenditure at 22%, and property taxes, again, property tax collections of $28 billion account for 24% of all revenue collected. And I think one of the biggest things that is going to continue to be the elephant in the room is the pension obligation, the unfunded pension liability. That's been something that's not been really addressed. There have been certain segments of it but the one that's the biggest thing for governmental employees and state workers just hasn't been addressed, and we really need to do something, because right now it represents about 16-17% of the total state budget, and if we don't do anything by 2023, it will be 30% or more of the state budget. So that's a huge number, and you have to ask yourself, what goes away? Because we have the outward migration issue, so it's really going to be a challenge if we don't do anything to tackle that now.
Yeah, I know, Ralph, you had the opportunity to serve on Opportunity New Jersey. Do you see them tackling any of these issues?
Oh, absolutely. They presented a paper. We've met on several occasions with the governor and with the staff members of the governor, and presented what we feel, is a plan to start to turn New Jersey around. The challenge is, their willingness to address some of those issues, and that, quite honest, it just hasn't happened. So we're disappointed, but I know we're still continuing to push the issue, and we'll continue to push the issue, because we all have a stake in New Jersey. I hate to see our members, leaving the state, going elsewhere, and running firms from down south and other areas. And not South Jersey, but down in North Carolina. We have a couple of members who are down there who have firms back here. So we've really got to work to do something like on that issue. So I think that we're going to really have to rally the business community and all the forces to come to the forefront to express their concerns and the challenges that we're having, because we're just losing people.
And Ralph, have we seen any business-friendly legislation on the agenda or before?
It's been on the agenda, but in terms of bills that have been passed that are business-friendly, I think when you look back at all that's been done in the almost 2 years of the Murphy administration, we really haven't seen anything that's been business-friendly or related that goes to stimulate business. If anything, it's been counter. The incentives are a big issue, and we'll talk a little bit more about those later. But those are, sucking a little bit of the oxygen out of the business community today. The concern over that. So that's an interesting state. But no, we have a number of bills that we've been pushing out. We talked about the pass-through entity bill. We've also done some things trying to get the state to address special depreciation. Section 1202 in the IRS code allows for special capital gains treatment and depreciation for small businesses. So that would be great, because we have 350,000 to 360,000 small businesses here.
Yeah, it's a big number.
Yeah, so.
Well, thank you both.
Good.
In our latest issue of New Jersey CPA magazine, we do have a great article on New Jersey lawmakers, what they have to say in New Jersey decision makers. I will tell you, I've read the article. It's a fascinating article, and I want to say kudos to our content editor, Kathy Hoffelder, for putting it all together. So make sure you read that in your next issue. Let's go to a different topic now, Kyle. Let's talk about New Jersey tax issues.
Oh, we love taxation, and
sure
New
do.
Jersey's no better place to talk about taxation. So the New Jersey Division of Taxation is going to automatically waive the late filing penalty for corporation business taxpayers with an extended federal return due October 15th, 2019, so long as the return is filed by November 15th. Also on the tax front, the scope of shore rentals, important to many of you, I'm sure, is subject to sales tax, but that it has now been narrowed. The tax will only apply to rentals of professionally managed units and rentals obtained through a transient space marketplace or travel agency under certain circumstances. The angel investor tax credit has been increased from 10% to 20% of the qualified investment. The goal here is really to encourage investments in women and minority-owned emerging technology businesses.
All right, thank Thank you. We did have a question that came in, and Ralph, I'm going to put this one to you. When will the triennial requirement for peer review exemption begin?
Well, it should, okay. So it will follow the triennial period for license registration. So that's what we know. Okay. So, and we'll make sure we get something out on our website about that.
Okay, good. One more. After January 1st, 2020, will the employer be allowed to ask the candidate's salary history information during an employment interview, or is salary history only prohibited on the employment application? You cannot do it in the interview or on the application.
Right, yeah, not at all.
It's off the board.
It is taboo.
So just a reminder, everyone, to vote on November 15th. All the New Jersey Assembly seats are up for vote. We're now going to move to National Issues section and talk about some AICPA topics. The AICPA has new ethics interpretation regarding hosting client records. And we have a brief video. NJCPA member and CPE instructor Ken Heaslip is going to walk us through and tell us what we need to know about this interpretation.
Today's topic is on the new ethics interpretation by the AICPA Peak Committee. That's a Professional Ethics Executive Committee. When this first came out, many people did not think it had much impact on their practices. As we read it, we find out that it could have a very large impact on practices. It is effective for July 1st, 2019. It only affects relationships that require independence, and that is important to note. So if you have a client or if you're in a situation where independence is not required, this is not going to affect you. When you look at the interpretation, hosting is defined as non-attest services that involve the member accepting responsibility for any of the following, and these three items are what's listed. Acting as the sole host of the financial or non-financial information system of the attest client, and that's really where we're going to focus, but continuing on, taking custody of storing an attest client's data or records whereby the data or records are available only to the attest client from the member, such that the test client data or records are otherwise incomplete. And then the third area is providing electronic security or backup services for the test client's data or records. Keeping client data or records on behalf of the client can get a little more complex because all of us keep records of our clients. The key here is, are we the primary holder of the records? So if we have the records for the client, and the client does not have the records and they're relying on us to keep them, that will be a problem. Before anybody goes crazy on this, there are two relatively simple solutions to this. You cannot be the sole custodian of these records, but you can have them as long as the client has availability. There are two ways to have availability for the clients. The first way would be if you just took what you did a backup, give it back to the client, could be an accountant copy or a regular backup, and the client restored that on their system. Therefore, they are keeping the records and they have the records and there's not a problem. So I have one client that I was doing the records and the solution was simply they spent $200 and bought QuickBooks, and that solved the problem. The other solution could be going to a service that's online like Xero or QuickBooks Online. Therefore, they have passwords, you have passwords, you can both access the files and they have the records, so if something were to happen to you, they would be able to have the records for themselves. There is a little bit of a twist here that causes a lot of issues, and these are the people who are saying this is more form over substance and maybe the ICPA has gone too far. But who has the license for that QuickBooks Online? If the CPA has the license for that QuickBooks Online, then you are hosting. If the client has the license for the QuickBooks Online, then you're not. And the logic for that is simple. If the CPA gave up his license, the client would not have their records. Where this is advanced into modern technology is on portal services. If the client is relying on you keeping it on your portal for their records, that's also considered hosting. So what the AICPA has strongly recommended is that when you put things on a portal, you put it up for a limited amount of time. The AICPA has not given us a whole lot of direction on that, and as many times we ask questions, I don't think they will give us a lot of direction. The standard says it must be within a reasonable amount of time, and that's all it says. They did say that they think a couple days is reasonable and more than a year is not reasonable. The last question I want to address, and this is really where everybody asks, what if I give them a hard copy of the QuickBooks General Ledger? Is that acceptable? And the standard says no, it's not. As far as the accounting system, if it's being kept electronically, you've got to give them an electronic version of that system. If it's not being kept electronically, it's being kept on paper like a depreciation schedule, then you can give it to them on paper.
So in addition to the hosting issues that Ken talked about, there are two more things that AICPA has been working on. The AICPA Auditing Standards Board proposed amendments to 3 sets of auditing standards for special purpose, single, and summary financial statements. And this was being done so that they would conform to generally accepted auditing standards to a new auditor reporting standards. You can read more about this on the link that is on your screen. AICPA also did an economic outlook survey with business executives who have taken a sort of sharply dimmer view of the U.S. economy. And this is as a result of the trade conflict and recession worries and that rise. Profit and revenue expectations have fallen to their lowest level since the third quarter of 2016. And also, hiring plans have softened due to the uncertainty. Again, you can read more about this at the link on your screen.
Thanks, Ralph. So, Kyle, we have some other agencies that we can look at. We have the IRS, FASB, Yellow Book. What's going on in those?
Well, I always
fun
thought
places?
Yellow Book was a coloring book,
There you go.
but I've been educated since then. So things in the IRS continue to be active. So currently the IRS is considering the creation of a practitioner services division. The creation of this division is strongly supported by the AICPA as well as the State Society here at the NJCPA. The IRS has also launched a new tax withholding estimator, so taxpayers can have the right amount of tax withheld during the year. There's a proposed new W-4 that's also been released, and a final version is expected to be released in November. There's also some final regs and additional proposed regulations on the new 100% additional first-year depreciation deduction that has recently been released. This will allow businesses to write off most depreciable business assets in the year they are placed in service by the business. Additional proposed regs contain new provisions not addressed previously, and you can read more about this at the link on the screen. The IRS is also automatically waiving the estimated tax penalty for the more than 400,000 eligible taxpayers who already filed their 2018 federal income tax returns but did not claim the waiver. The IRS lowered the usual 90% penalty threshold to 80% due to withholding issues under the Tax Cuts and Jobs Act. And the IRS is continuing to crack down on virtual currency transactions, so be careful with those bitcoins. The IRS started sending letters to taxpayers with virtual currency transactions that potentially failed to report income and pay the resulting tax from those transactions, or did not report their transactions properly. To help with upcoming extended filing deadlines, the AICPA has prepared resources for states that are affected by the continuing implementation of the Federal Tax Cuts and Jobs Act. You can see more details at the link on the screen. The Financial Accounting Standards Board continues to stay busy and very active, and they are looking to give private companies, nonprofits, and certain small public companies additional time to implement 3 very complex new standards. The current expected credit loss standard, or CECL, the lease standard, as well as the hedging standard. Comments on these were due by September 16th, and a final decision should be forthcoming. And for those of you who do government audits, unlike me who thought it was a coloring book, the 2018 Yellow Book is effective for financial audits for periods ending on or after June 30, 2020. However, don't wait until 2020 to become familiar with the new standard, and also be sure to review the independence issues. You can learn more at a complete guide to the new Yellow Book, which will be presented by the NJCPA on December 9th in Islin, as well as numerous times online this fall and winter. Ellen, back to you.
Right, and again, we do have a link on the screen to some of those. So, what will the CPA and his or her role look like in the future? It's a topic that both the AICPA and NASBA are currently working on. And Ralph's going to take us through and let us know what these two organizations, where they are in the process and what they're thinking and what will help us.
Yes, it's going to be very interesting. As you mentioned, both the AICPA and NASBA have been working on evolving the CPA licensing model. They've come up with 5 guiding principles at this point. And the CPA profession, principle number 1, the CPA profession must adapt quickly due to technological disruptions in areas such as data analytics, robotics, artificial intelligence, and more. And we, I think, all realize the impact that that's had on the profession. Technological and analytical expertise are essential to performing assurance work as well as the other services that are core to professional accounting. And I think we see that now in how the teams are being formed within firms. They're not necessarily all folks that are CPAs. They're folks that bring different talents and competencies to the table because of what their clients are doing. Sustaining the profession and continued public protection require rethinking on initial licensure requirements, and that's a really big important issue, because I think the public at large may think by making changes that maybe things get watered down or whatever, but that's not the case. So I know NASBA is very focused on that, as well as AICPA, that the whole concept of public protection is foremost in this discussion about what the future of the CPA is going to look like. The profession, and therefore entry into the profession, must be redesigned to attract individuals with technological and analytical expertise. This includes non-CPA professionals whose technology and analytical skills are critical to the performance of assurance and other core services, as well as non-accounting major students. So all must demonstrate a minimum required competency necessary to perform professional accounting services as a CPA. So 2 additional concepts: there will be needs to be a degree of flexibility in the education requirements, and right now they're kind of tight that you have to have the X, Y, and Z. So it's going to be very interesting to see what ultimately evolves around that, and we'll probably get a little glimpse of that when we go to fall council meeting, where there will definitely be discussions about what has transpired thus far. So it's going to be very.
And we can have that update on our December's Issues Watch.
That's correct. Yeah. So stay tuned for what will be, I think, exciting presentation on this issue, because it's just like the workforce today. We have 5 generations in the workforce today, and each one marches to a different beat of the drum, if you will. And so it's going to be challenging as we look at our profession, where we have, boomers and maturers who are still working and practicing, and how they, adjust to what comes out about this. So I often say, we're going to have to get comfortable with playing outside of the sandbox that we've always played in before, and that's, I think, going to be very true going forward. But I do think there were concerns that we have multiple CPA designations or whatever, and I think clearly, from what I'm hearing from the discussions that have taken place now, that's not going to be the case. So you won't have CPA tax, you want a CPA audit or CPA for those kinds of designations. So it will be interesting to see what comes out and what competencies will be drawn in that people have to have, in order to qualify to become a CPA going forward.
So Kyle, you're in public practice. What are some of the things that you're actually seeing right now?
Yeah, I think we continue to see a bit of a skills gap in the students coming out of college and joining our firms. The importance of written and verbal communication skills continues to be very critical. Likewise, just exposure to technology and information systems, the ability to utilize things like Excel to do, efficient, thorough data analysis and analytics.
You've hit the nail on the head.
Yeah.
I think every meeting that we've had with firms, communication skills and the use of Excel and things of that have been
Basics.
the first two things that managing partners have talked about where there's been a concern there.
Yeah,
they're just not what they should be with folks coming out of college.
Yeah.
And talk a little bit about the shift in the hiring models.
Shift in hiring, I guess, so CPA firms are looking to shift the hiring models. We're seeing more and more of that as well. And again, geared more towards technology. And so non-accounting graduates are now comprising, on average, about 31% of all new graduate hires in public accounting. And that's an increase of 11 percentage points from 2016 to 2018. But I would say firms are still hiring a very large number of CPA-type candidates. That really hasn't changed. It's really more, we're seeing more of an increase in the number of the non-CPA, non-traditional type candidates in our hiring. And looking ahead, this year's PCPS, CPA Firm Top Issues Survey, asked respondents to identify how much they expect certain issues to affect the way their practices operate over the next 5 years. And the chart here on the screen shows that sole practitioners are most concerned about dealing with change, especially in the areas of regulation. But staffing continues to remain a top concern for all other firms, regardless of size.
Yeah, thanks, Kyle. Yeah, I do have a question here. I'm going to toss this one to Ralph. I've heard the AICPA is reporting that the number of CPA exam candidates is down. Does the AICPA or NJCPA have opinions as to why, and what, if anything, we can do about it?
Sure. The number of people taking and passing the exam goes through its ebbs and flows, and particularly when there are changes made to the exam, where 2 years ago, more critical thinking type scenarios were put in the exam. So we saw an influx of people taking the exam before that actually hit. And then when that actually hits, you see the number of takers going down. So I think we still have a very high enrollment in terms of accounting majors. I think from our perspective here at the NJCPA, one of the things that we're trying to do to stimulate more people to really go and take the exam is to get out and have discussions with students on campus about what today's profession is like. Because I think, right, wrong, or indifferent, we have some professors that are still teaching. I often remark about this. In my alma mater, my daughter had the same cost accounting teacher that I had 44 years ago. Good guy. But when you think about, so much has changed over that period of time. And so, I think making sure that the students, accounting majors, know what today's CPA profession is, and the different things that are going on. Like you talk about how the teams are now comprised differently and the expertise that's brought in. So I think that that's important, and also talking about the opportunities that are available down the road, because I think that that's something that's not addressed enough for students who are majoring in accounting in colleges. So we've got our team that's trying to hit all the 24 four-year colleges here in New Jersey to make sure that the students understand what today's profession is all about, what are the skill sets that people are expecting that they have when they graduate, so that they can address those if they're not getting them in their core curriculums and whatnot, and so that they'll be ready to hit the ground running when they get out and accept a job. So
thanks, Ralph. That was helpful. We're going to move on to the New Jersey issue section, or the NJCPA issues, I should say, and we're going to start with the student loan debt crisis. This is something our emerging leaders are certainly dealing with every day. We've had some discussion on the open forum, and I'm going to ask Ralph to
it's been some interesting conversation on the open forum, but student loan debt is currently nationally $1.5 trillion issue, and it's just not an issue for millennials, but also their parents and the Gen Xers and the boomers. We recently conducted a survey amongst our members, and 76% of our respondents said student loan debt in New Jersey is a major problem. And I think we see that by virtue of the fact that New Jersey is the largest exporter of high school seniors to go to colleges outside of the state of New Jersey. And approximately 65% of those students don't return to New Jersey. So that impacts New Jersey's ability to draw talent and whatnot into the marketplace. So, it's also, what came out of the survey is that people defer things that, like saving in their 401k plans, or making major life purchases, like buying a home or starting a family. It was interesting to read, see some of the comments about people deferring getting married because of the student loan debt. But you do hear it. It's incredible. And when you think about it, well, when we went to college and what the cost of tuition was today versus what it is today, it's incredible how it has increased. And so it poses a real problem, I think, here in New Jersey. We've created a task force that's been working with New Jersey Assemblyman Gary Scheer on drafting legislation to provide tax breaks for student loan debt payments. Now, this is not something that's going to solve the problem, but it's part of sort of a stair step to get to helping address the problem and helping people with that issue. I've met with students and who have recently graduated, and I say, "Oh, are you going to take the CPA exam?" And they say, "Well, just graduated. I'm going to have to start paying my student loan, and then I got to find a place." And so I think back to the problem of taking the exam, we've something like this would help, I think. And one of the things that we're doing is trying to help some students with the lottery program that we have to provide funding to address some of the cost of the CPA exam. So it's we've created this task force. We're supporting both national legislation to make employer-provided student loan payments tax-free, the same as tuition reimbursement. We've published a checklist of things to know before taking out a student loan, so parents can go on and see, because it's really shocking when you go to these forums and talk about the cost and all that's entailed in funding the school loan. So this I think will be an exciting group, because our emerging leaders are involved in that, because they're dealing with that. And so I think it'll be helpful. But we also are going to look to get some of our seasoned members engaged as well, so that we can bring their expertise to the table.
Well, thanks, Ralph. The leader of the NJCPA Emerging Technologies Interest Group, Sean Stein-Smith, talks about 4 leading new technologies and how they are impacting the profession. We have a video which features Sean now.
Hi, I'm Dr. Sean Stein-Smith. The biggest overarching trend out here right now in audit, in tax, and any advisory service offerings is the advent, and really as all of us as individuals and as firms are trying to onboard these emerging tech tools, a few of which are now popping up here: blockchain, cryptocurrencies, RPA, and AI. It's really important for us to understand also, on the first hand, what these tools are, and then how they are already driving change in every aspect of our workload. So blockchain and crypto, right, but go hand in hand, are talked about constantly. But a good way to sort of have this visualized is to almost talk about blockchain as that underlying platform, right, that underlying tech stack, where other applications like Bitcoin, Litecoin, smart contracts run on top of it. So both of them are on the same team, but they both have different roles, right? And then AI and RPA often go hand in hand too, right? So AI is all the way up here as this sort of goal, right, where all of us want to get to, right, where our computers and our networks can actually work with us, work for us, and work independent of us, right? But honestly, most firms and most clients are not ready for that right now. So RPA is almost that halfway point or that introductory point, right? Because every single IT system out there right now has some automation capability in there. And so RPA is almost like that next step, right? Automating processes in accounting, in HR, inventory, payroll, any process that is done over and over is a right candidate for RPA. And then all of that automation and that workflow documentation can help us build to AI, right? And so the blockchain by itself is not an accounting tool to round out our conversation right here, right? So blockchain is talked about quite a bit, and it serves as that underpinning for Bitcoin and other assets that have captured our focus, right, since 2016, 2017. But blockchain is not a accounting system, right? There are no entries done in blockchain, but our processes, our systems, and our workflows are already integrating some aspects of it into how audits are done, how tax returns are done, and in those other service offerings we can actually give to our clients now and going forward. And so the NJCPA ETIG, the Emerging Tech Interest Group, it covers all of these topics, right? Both in-depth sort of going over sort of how these tools function, what they are, and then also more importantly, trying to highlight trends, topics, and themes for us to know internally and for us to bring to our clients to help them solve business problems. And really sort of that's the overall goal of the ETIG, right? To help make sure that all members of it, that everybody in the NJCPA is able to talk about these tools, to understand how they already are changing work in accounting, and to be able to then harness that knowledge and to build on it to actually give more comprehensive service offerings now and going forward. And so it's a excellent time to be a part of it. And there are going to be some steps right now up on the screen showing you how to join. I'm looking forward to having all of you join as members.
This is a highly energized group. If you had an interest in technology, we strongly suggest that you join this group. It's a great way to learn more about these technologies and the impact they have. The same goes for all of our interest groups. They are great venues for gaining information, whether it be in the tax, audit, or technology areas. These groups can be key to your professional development. Well, now we're going to move on. So Kyle, you are coming close to finishing your 4th month. It's flown, right, as president?
It's flying by very quickly. And just back on these interest groups as well, it's a great way to get our young professionals involved from all of our firms. It's a super opportunity for them to operate in a safe environment and network and really get to know more about
I
our
think
profession
sometimes,
and
Kyle,
key issues.
people are intimidated they think if I want to join the tax interest group, I must be a tax guru.
Not at all.
Where you actually garner a lot of knowledge.
Yeah, and that's the point of the interest group, right, is to share ideas and knowledge and learnings and best practices. And I think too many of our younger professionals, one, don't take advantage of it, or they're not aware of it.
Absolutely.
Or it just requires a more senior member of the firm to just kind of bring them along.
Absolutely.
That's so important.
Yeah. And I think that's how I ended up as president here at NJCPA. A senior partner grabbed me by the ear and drugged me down here, 10 years ago,
Nice
kicking
transition.
and screaming, right? So it's been great. The 4 months have gone by super, super quick. I feel like the convention was yesterday, and I'll put a plug in for the NJCPA convention. It's an outstanding opportunity to network and to learn and grow and meet other members of the society. And I would just highly recommend that people really do consider joining us at the convention in June. The other great thing about the convention, yours truly got an opportunity to get up on a stage and bang away on drums. I heard the Ramones, I think, showed up at the convention as well and played a set. But that was super fun as well. So I appreciate that opportunity to make a fool of myself with a big hairy wig on my head. Other things that I'm going to continue to focus on as president, which I had just mentioned about interest groups as well, it kind of ties in nicely, is again, just taking advantage of how we can get our younger folks involved and really demonstrate the value of membership and the value of being a CPA. And so, I will continue to make that, sort of priority number one in my presidency. I'm also excited about an opportunity to drive the conversation forward around diversity and inclusion. So looking to launch a series of workshops with the staff and leadership here at the Society. So we have some important work to do there and some things on the horizon to get that rolling. And in fact, at our next Board of Trustees meeting, I'm bringing one of my professionals who's an expert on the topic of inclusion and the importance of inclusion at the board level so that we as leaders are sort of driving the conversation and being very supportive of an inclusive culture. I'm also excited about continuing to engage with firm leaders and academia. Ralph and I just recently spoke to a group of business school deans and professors about the profession, about our brand, the impact of innovation, which we again talked a bit about here on today's IssuesWatch, and then the skills and knowledge gap that we continue to see in the younger professionals that we hire. And lastly, there's just a tremendous amount of resources available to you as a member and to your firms in the areas of M&A, hiring and marketing. And as you can see on the screen, we have relationships with Matters of Management, Whitman, and the Accountants Advisory Group, to name a few. So just a wealth of information and opportunities to grow and network.
Oh, that's great, Kyle. It's been a pleasure, first 4 months, and I know we're going to
4 months down, yeah.
We're going to enjoy the next 8 months.
Absolutely.
Also exciting is we have a new communications email that we're going to be launching called the CEO Compass, and I'm going to let Ralph tell you all about it.
Well, it's going to be our way to keep our members informed about what's happening because there's been a lot of activity with this new administration. And I know we also have the podcast that Jeff Kazerman does every 2 weeks, I believe, bringing in people from the environment in Trenton to talk about what the landscape. So if you want to stay in tune with what's happening, those are two vehicles that you should take advantage of, and hopefully they'll be informative and get you to be up to speed on what's happening here in New Jersey, because I think we're going to have a lot coming down the pike, and I think the next 2 years of the governor's tenure as governor, and it's going to be interesting to say the least, I think.
Well, thanks, Ralph. We look forward to that. So we have a few programs and services we just want to make you aware of. Career Night, October 1st. It's not too late for firms to sign up for a table. Student and CPA candidate members will attend for free, and you can see the link on the screen. We're in the midst of our annual food drive. It runs through November 15th. This is something the emerging leaders coordinate every year, and it is absolutely one of the most successful things that we and they do. We have collection locations throughout the state. Also have a link on your screen. The IssuesWatch podcast that Ralph alluded to just a couple minutes ago. Listen every other Tuesday for updates and information on important political and policy issues affecting New Jersey businesses and residents. That concludes this edition of IssuesWatch. If you have a colleague who missed the program, we'll be replaying it twice for CPE credit. The first time is September 25th, and the second time is September 27th, both at 12 noon. In the meantime, check njcpa.org, NJCPA Pulse, and the open forum for updates on all the topics we discussed today and more. And remember to follow each one of us on Twitter. One last thing. NJCPA...
Could I put what? I just want Career Night is such a great event and a great opportunity for members. It's not just for students. Our members can come out and really inspire young people about the profession and the opportunities. I get excited about Career Night, so I'm.
Oh, it's a great night.
It is. It's just one of
recommend
our signature programs that we do. So for young people, young staffers, come out,
Send them out.
and join the crowd and really, get these young people who are getting ready to move up and move forward in the profession excited about it. So
I agree,
Thanks,
Ralph.
Ralph.
100%. I'm glad you chimed in.
So the one last thing was, unless you're under a rock, I think you know that the NJCPA recently moved its new offices and we're now located at 105 Eisenhower Parkway in Roseland. Please enjoy this video and stop in anytime for a visit. Have a great day.
Now, this is a story all about how the NJCPA moved across town, and I'd like to take a minute or two of your day to tell you how we got to Eisenhower Parkway. On Eagle Rock Avenue, 425, for 30 years is where we spent most of our time. Chilling out, maxing, relaxing all cool, and teaching our members in the CPE school. But in 2019, it was time for a change. We looked all around within the 40-mile range. After months of searching, we finally found it. We signed on the line, 105's a great fit. I called for an Uber, and when it came near, plate said CPA and it had swag on the mirror. It isn't too far, just a 2-mile drive. So I said to the driver, your home's 105. You'll pull up to the building at the end of the road. Elevator to 3, left and left is our home. At reception we greet you and the smiles are free. We'll make your experience the best it can be. There's our kitchen and murals that highlight the state. In our studio, this video we did create. Education is crucial, live streaming is key. Our office are yours, you'll get your CPE. The staff is thrilled, everything shiny and new. On the carpet and walls is NJCPA blue. Stop by anytime so we can finally say, welcome to the new home of the NJCPA.